Because even the banks, and because they are very, they take too much care on that. Even the banks, they follow the rating agencies' reports daily. So, following this rating agencies' report, they start asking for CDS contracts in order to protect themselves from the risk on the Greek bonds investments. So they were asking for CDS in the international markets, and the owners of the CDS contracts, who they bought naked at the first moment, they were selling these contracts to the banks, making money, making speculation from the surprise that they were charging them, you understand? Mm-hmm. This was the game. Even the banks lost money on that game. It's not only Greek economy who suffered losses. Even a lot of banks, they lost too much money on that game. Mm-hmm. But from their side, they didn't do anything. I hear for some single legal actions from some single banks to some issuers of CDS or to some traders of CDS. But still, we don't know if these legal actions include also Greek CDS transaction or not. We still don't know that because this is under investigation process secret. So
well, I'm sorry, that I didn't catch that last part. You don't know if it included Greek CDS?
I said that single banks, single European Union banks, mm-hmm. who took criminal legal actions against some CDS traders, mm-hmm. and we don't know if those banks did that because they bought Greek CDS or CDS of some other country. Because there are a lot of sovereign CDS in the international market. It's not only the Greek ones.
Right.
There are also Spanish, Portuguese, Ireland, Italian, from all over the countries. It's not only the Greek one for the European Union.
Mm-hmm. All right, so you talked about the rating agencies and the role that you allege that they played in affecting the sentiment in the market. You talked about the credit default swaps, which are, as you say, fake insurance because they were. We don't even know if the companies that were issuing this insurance were legitimate insurance companies and were well capitalized. So you explain that. Then there's also the issue of the bonds, the Greek government bonds, and your analysis on what was played in the secondary bond market.
Exactly.
So go ahead.
And after that, from January, February 2010, a second game started here in the secondary market of the Greek bonds. There was a continued naked short selling of Greek government bonds that was allowed to happen by the Greek Central Bank, who brought the settlement time from 3 to 10 days. So, from one hand, we had CDS tradings who helped the CDS rates of the Greek market to increase, and from the other side, we had the fake supply of Greek bonds due to the naked short selling of the Greek bonds in the secondary market here in Greece. These together, these two separate things together, create a real financial bomb, because together we had the rates of the CDS, and that means the rates of the interest of the Greek bonds to increase, and in the same time, the value of the Greek bonds to decrease as a result of the naked short selling on the secondary market.
Now, let me see if I understand correctly when you talk about naked short selling of Greek government bonds. What you're saying is that people or institutions were taking out short positions. In other words, they were betting on a drop in prices, but they were doing it without actually owning or having borrowed the bonds. So,
exactly.
So
without to have or to borrow the bonds. At the moment that they were selling the bonds, they didn't have also the agreement for the lending of these bonds, you understand? Mm-hmm. So that creates also very difficult situations to the settlement days of these transactions. And for that reason, the Central Bank of Greece, to facilitate this game, brought the settlement days from 3 to 10 days. So they did that in order to facilitate the speculation on this naked short selling of the Greek government bonds.
Because the longer the settlement window, the longer the time you have to get...
more easy to find the bond what you sold.
Exactly. So it means that you're able to keep the pressure on the market longer,
exactly.
and you're able to create an artificial sense of supply, correct?
Exactly.
And anyone who knows rudimentary economics knows that if you increase supply while concurrently...
the prices are falling down.
Right, and at the same time, as the prices are falling, the demand for CDS is rising, so you've got to squeeze on the price of the CDS going up, and you've got to squeeze on the bonds for Greek bonds going down.
Exactly that. Exactly that. And after some investigations what we did in the market, we discovered, and this is very serious now, that the same institutions who were involved in this kind of transactions, that means naked CDS trading and naked short selling of Greek government bonds, some of them were between the prime dealers of the Greek government bonds. That means some of them, and this is very, very serious, had contracts with the Greek government in order to place the Greek government debt to international markets. What is that? This is exactly what happened in the United States with the subprime loans. The same, let's say, prime dealers of the CDOs, they were placing at the international market CDS on the same paper. This is very serious because this is against the interest of your customer. This is a real case of conflict of interest and of insider trading also, because when you have contract with the Greek government to place the debt in the international markets, you have the first thing that you have to do as a prime dealer, it is to take care of the interest of your customer, that is the Greek government. So if you sell your customers' debt to the international market, in the same time, you cannot sell your customers' bankruptcy to other customers, because this is exactly what they did. And they did that without to inform on that specific case the Greek authorities, that means Central Bank of Greece and Minister of Finance in first. So this is why we are talking about an organized criminal plan, because there are many things that they happen together and they were committed by the same persons and they got the same result. So cannot be that all these separate things happened in the same moment, were not organized, because this is impossible. How they get the timing, the results, and the way how they operate, it is 100% sure that this was organized. It was a very, very specific plan organized by people with experience on this kind of business.
So just to clarify, and I want to continue with this point, when you say the primary brokers of Greek debt, so essentially the bankers for Greece, the people that are there whose job it is to raise money for Greece, were also at the same time, as they were syndicating loans for the Greek government and vouching implicitly by selling those to their clients, effectively vouching on the value of those loans, they were at the same time taking out negative bets against those loans.
Exactly.
Now, can I ask you something? Would it be possible for these primary dealers to make the argument that they were simply hedging their positions?
No.
Okay.
Cannot be, and I explain you why. Because the prime dealers, when they buy, when they deal on the government bonds, they don't buy for themselves. They buy in order to resell to other customers. They make money on the transaction. They get the commission of the transaction. They not buy for themselves. Even if they buy, let's say, they could keep for themselves 5-10% of the total bonds value. The rest of what they buy, they resell to other customers. So you cannot say that they were buying bonds for themselves from one side, and from the other side they were buying insurance for these bonds. Because if all the game was done in order to protect themselves, then there would never be this trading of CDS in the international markets. If I buy CDS for myself to protect my interest, I'm not going to resell that a moment after, you understand? So what happened is not protection. The transactions were done on the Greek government bond, the CDS transactions, were not protection transactions. These were speculation transactions, and we have 3,000 elements to confirm that.
Now, when I read your lawsuit, one of the things that I noticed is that you put a specific dollar number on how much excess debt the market perceived there to be as a result of the naked short selling. Am I correct in that, or?
How much excess? What the figure that we have? It is the figure of the damage for the Greek economy. That only for the year 2010, it was calculated at 13 billion euros.
Mm-hmm. No, I'm remembering some number, something like $1 trillion. I had something about...
No, $1 trillion, etc. It's another story.
Okay.
$1 trillion, it is the total of the CDS transactions for the year 2010. And from this $1 trillion of transactions, Greek CDS transaction at the same time was about $85 billion.
Notional.
Yes, notional.
Which meant that $85 billion was insured.
85 billion, 85 billion were transactions, were CDS values.
So what does that mean in terms of, let's say...
do it per 10 and you get the figure.
Oh, okay. All right.
Because average rate of Greek CDS is 10%. Today it's 15-16%. Some months ago was 7 to 8, so on average it is 10%. So if premiums were 85 billion...
they were premiums. They were premiums.
Premiums.
Oh, okay. All right.
No premiums. It was, excuse me, it was not premiums. It was total transactions. That means that if I have 1 million euro premium and I make 10 transactions of that, for 1 million I make 10 million of transactions, you understand?
I see, okay.
Who makes the money on this game, you need to understand, are the people who are dealing on that, who are making transactions, because for every transaction, they get commission. So people making transactions, they earn much more from the issuers, from the buyers, or from anybody else, because if $1 million, for example, you make 10 transactions on that, total of the transaction is $10 million, you understand? And if you take a 3, 4, 5% on commission on that, to the end of the day, you make more money from who issue the premium.
Okay. Let me ask, is there anything else that you wanted to explain as far as this?
This is the way how all that story was organized here in this market, and that happened for very, very simple reasons. The first reason is that the Greek economy is very small, so for somebody who was intended to manipulate some European Union economy, Greece was the most easy target to do it, because Greek economy is very small. Consider that total Greek GDP, it is smaller than capitalization of Google or some other blue chips, what you have in the United States. So it is like you try to manipulate a medium-sized company in the United States market. It's so easy to do that. First thing. Second thing, they found the way open to do that. That means that local institutions, for sure, they didn't take care of that, and they didn't stop them in doing that. But in some cases, what we say on our criminal charge file, it is that they facilitate them to make these fraudulent transactions and to speculate on Greek economy, manipulating the market. So they were also facilitated to do that. And third thing, that is very important, it is that the local market here in Greece, at the moment, didn't have any experience on these derivative products. That means when I saw by myself, when we fill this charge file in the first month of 2010, speaking even with people who are economists, who are in the market, who are following this kind of business for a lot of years, they couldn't understand exactly what is the topic. They couldn't understand what a CDS contract it is, what a CDO contract it is, etc. So in this market, there didn't was any know-how to protect institution and market from this speculation attack that arrived from people who were very expert in doing this kind of job. And unfortunately, this experience was missing too much to our government, because people who were involved and were responsible as government officers and even ministers, etc., they didn't have any experience on this kind of products to understand that what was happening at the moment was pure manipulation of the government debt, because if they could understand that at the moment, for sure they would have a different reaction and the story today would be much different for the Greek economy.